3 things just happened in the last 24 hours that confirm everything I've been telling you on this channel. And a 4th thing happened that the financial media is completely ignoring. By the time you finish this video, you're going to understand why gold just bounced back to $5,000, why silver is recovering to $78, and why the next move could be the biggest one yet. First, the United States government just confirmed a price floor system for critical minerals, including silver. Second, Hecla Mining, the largest silver producer in North America, just reported their full year results. And buried inside those numbers is a detail that proves industrial buyers are bypassing COMEX and paying 30% more to buy silver directly from mines. Third, the CEO of APMEX, the largest online precious metals dealer in America, just published a letter saying shipping times are finally back to normal after a full month of delays. And fourth, there are currently 35,000 call options on March COMEX silver futures that are in the money right now, and the banks cannot do anything about it, even after crashing silver 46%. Let me show you why these 4 stories together are the most bullish signal for silver I've seen since this entire cycle started. And I'm going to be honest with you, when I saw all 4 of these hit within the same 24 hours, I almost couldn't believe the timing. Let's start with the biggest story, because this one changes everything. Bloomberg reported yesterday that the United States has developed a critical minerals price floor system and is pitching it to allies. This isn't a rumor. This isn't speculation. Under Secretary of State for Economic Affairs, Jacob Hellberg confirmed that multiple U.S. agencies have developed the system and are having active conversations with allied nations. But this didn't come out of nowhere. Let me give you the full timeline, because the media is only covering yesterday's headline. They're not showing you the buildup. On February 4th, Vice President J.D. Vance stood in front of representatives from 55 countries at the Critical Minerals Ministerial at the State Department, and he said something that should have been front-page news everywhere. He said the U.S. will establish reference prices for critical minerals at every stage of production. And for members of the preferential zone, these reference prices will operate as a floor maintained through adjustable tariffs to uphold pricing integrity. Let me translate that. The U.S. government is telling the world that critical minerals, which include silver, will have a minimum price, a floor below which the price cannot fall within the trading block, and they're backing it with tariffs to enforce it. When I first read this, I had to read it 3 times because the implications are enormous. A price floor means the U.S. government is essentially saying, we will not allow the market to price silver below a certain level. That's not free market economics, that's strategic economic warfare. And the fact that 55 countries are sitting at the table tells me this is much bigger than most people realize. I want you to think about what this means for silver. The U.S. government has now officially acknowledged that the free market price of critical minerals is broken, that China's dominance in processing and refining has distorted prices to the point where Western companies cannot compete. And the solution is not to let the market figure it out. The solution is to set a price floor. This is the most bullish policy development for silver in decades. And I'm not exaggerating, because if silver has a government-backed price floor, every ounce you hold has a backstop. The government is telling you your silver will never fall below a certain level within this trading block. That changes everything for miners, for industrial buyers, and for anyone holding physical metal. And here's what I find fascinating. This announcement came out on the same day that silver was trading at $74, down from $121 after the biggest crash in 46 years. The U.S. government looked at silver at $74 and said, the market price is broken, it's too low, we need to put a floor under it. Read that again. The government of the United States is telling you the current price of silver is artificially low. Now, this is where it connects to my previous videos. I told you about China's silver export controls. 44 companies licensed silver reclassified as a strategic material, the same regulatory footing as rare earths. What Vance is doing with the price floor is the Western response to China's export controls. China is restricting supply. The U.S. is guaranteeing price. Both actions point in the same direction. Silver is going higher. The only question is, how much higher? And if you're wondering whether silver is actually included in the critical minerals list, let me remove all doubt. The U.S. government designated silver as a critical mineral through the new Strategic Reserve Project. The Section 232 investigation concluded that imports of processed critical minerals threaten to impair national security. Silver is used in every advanced weapon system, every solar panel, every semiconductor, every piece of military hardware the U.S. produces. It is definitionally critical. Welcome to the hidden economy. If you're new here, subscribe and drop a like. One click from you helps thousands more see this. Thank you. Now, let me show you what Hecla Mining just revealed. Hecla Mining Company released their 4th quarter and full year 2025 results yesterday. Revenue over $1.4 billion, up 53% from last year. Net income $321 million. That's 9 times more than 2024, 9 times in 1 year. These are the best numbers in Hecla's entire 135-year history. I've looked at a lot of earnings reports over the years. A 9 times increase in net income is not normal. That's what happens when an entire market reprices around you and you're sitting on the supply side. But those aren't even the numbers that matter most. This is the average silver price for the fourth quarter of 2025 was $483. That's the market average. The benchmark price, what COMEX said silver was worth, Hecla's average realized silver price in the fourth quarter was $6,928. Let me make sure you caught that. The market said silver was 54.83. Hecla got 69.28. That is a $1,445 premium, nearly 30% above the average market price. Not in Shanghai, not in some back alley deal in America from America's largest silver miner, reported to the SEC on the record. That's not a rumor. That's an audited financial statement. Now, how does a mining company realize a price that is 30% higher than the market average? There are only 2 explanations. Either Hecla held back production and sold everything in late December when prices spiked higher, which would mean they were timing the market rather than selling steadily. That's possible, but unusual for a company of this size, or industrial silver buyers are going directly to silver mines and paying a premium to secure physical supply, bypassing COMEX entirely because they need actual metal for manufacturing, and they cannot rely on the exchange to deliver it. I think it's the second explanation, and here's why. We already know Samsung locked up 100% of the output from the La Pria silver mine for 2 years through a direct prepayment deal. We already know that London lease rates hit 34.9% in October because institutions were desperate to borrow physical silver. We already know that Shanghai physical silver trades at a 20% premium to paper. And now we have the largest silver miner in North America reporting a 30% premium on their realized price. This is not a coincidence. This is a pattern. Industrial buyers are going around COMEX. They're going directly to the source because the exchange cannot guarantee delivery. And when buyers are willing to pay that kind of premium to get silver directly from mines, that tells you the real price of silver is not what COMEX says it is. The real price is what someone will actually pay to get their hands on it. And right now, that price is far higher than the ticker on your screen. And this connects directly to what I showed you in my last video about the Shanghai premium. Physical silver in China at $99, while COMEX says $74. Now we have a US miner confirming the same pattern from the supply side. The mines are getting more than the market price because the market price is wrong. The CEO called 2025 transformational. A year ago, they were carrying hundreds of millions in debt. Now they're essentially debt-free. Silver did that in 1 year. And looking ahead, Hecla is making a move that I think is one of the most important signals in the entire mining industry right now. They're selling their gold mine for almost $600 million to go all in on silver. Gold is at $5,000 and they're selling the gold mine. Let me say that again. They are choosing silver over gold at $5,000 gold. These people know something. Their 2026 guidance calls for 15 to 16.5 million ounces of silver production, and they're nearly doubling exploration spending to 55 million. And their cost structure tells you why they're this confident. All-in sustaining cost, $18.11 per ounce. Realized price, $69.28. That's a $51 margin on every single ounce, 74%. Their Greens Creek mine in Alaska reported a negative cash cost after byproduct credits. Negative. They're getting paid to mine silver. That's how profitable this is. Now, let me show you what the CEO of APMEX just told his customers, because this one is personal for anyone who buys physical silver. Ken Lewis, the CEO of APMEX, published a letter to customers on February 17th, yesterday, and I want to read you the key line. He said, "Shipping times and customer service levels have returned to the fast, reliable standards you expect and deserve." Sounds like good news, right? Shipping is back to normal. Problem solved? But let me tell you what he also said. He thanked customers for their patience, understanding, and trust during one of the most extraordinary periods the precious metals market has ever seen. He said they experienced unprecedented demand, record prices, and supply challenges that put pressure on the entire industry. Let me put this in context. APMEX is the largest online precious metals dealer in the United States, and for roughly a month, they could not ship silver on time. They added 4 extra business days to every estimated ship date. They reduced their product selection to 31 core products and could only keep 21 of them in stock. They increased customer service headcount by 25% just to handle the volume, and they experienced weekend order volumes that were 7 times higher than normal. This is the largest dealer in the country with decades of experience with massive warehouses and minting operations, and they were overwhelmed for an entire month. Hey everyone, let's talk about what's really happening with physical silver. Forget the paper markets for a second. Right now, there's a huge disconnect. While the official spot price might seem stable, getting your hands on actual silver coins and bars is a different story. Premiums are high and supply is tight. Why? Because demand is soaring. People are waking up to silver as a real store of value, especially with all the economic uncertainty. So, what's next? Many experts believe this physical demand will eventually force the paper price to catch up. We're seeing major mints struggling to keep up, and inventories at exchanges like the COMEX are dropping. This isn't just a short-term blip, it's a fundamental shift. As more people choose physical silver over paper contracts, we could see a major price correction upwards. Keep a close eye on this space. Thanks for watching, and be sure to subscribe for more updates.